Hey, what's going on, everyone? Welcome to the Super Tuesday edition of our CPA News Update. Bill Sheridan here with the Maryland Association of CPAs and the Business Learning Institute. Let's take a look at what's happening around the profession today, Tuesday, March 1st, 2016. First up, the IRS is telling payroll and human resources professionals to be on the lookout for an emerging phishing email scheme that purports to be from company executives and requests personal information on employees. The scheme already has claimed several victims as payroll and HR offices mistakenly email payroll data, including W-2s that contain social security numbers and other personal information, to cybercriminals posing as company executives. You can find out more about that at irs.gov. Tomorrow, a set of tax proposals aimed at improving the business environment in Maryland will come before a joint hearing of the Maryland Senate's Budget and Tax Committee and the Maryland House of Delegates Ways and Means Committee. The proposals include a reduction in the corporate income tax rate from 8.25% to 7% over a 2-year period. That's beginning in 2016. And it also calls for an exclusion for individuals of the first $20,000 of non-passive income received from pass-through entities. The MACPA has not taken a formal position on these proposals, but we are sharing this information in case you want to contact your legislators, tell them what the potential impact of the proposals would be on your business. Edith Ornstein has more on these proposals at our blog, cpasuccess.com. Small and mid-sized accounting practices in different parts of the world are tempering their expectations for growth. That's according to a new survey by the International Federation of Accountants. That survey found that accountants working in small and medium-sized practices are generally optimistic about performance in 2016. A majority predict revenues will stay the same or increase across all service lines. However, optimism is not at the same level as it was a year ago, and growth projections across service lines have dropped since 2014. You can read more about that at accountingtoday.com. With more and more companies promoting bookkeeping that deviates from U.S. standards known as GAAP, or generally accepted accounting principles, the Securities and Exchange Commission is warning about getting too creative with your books. The concern is that too much non-GAAP accounting could make it harder for investors to size up companies. That's a risk that was driven home during the NASDAQ boom of the late 1990s and more recently at Groupon, which, before going public, used profit measures that stripped out some of its biggest costs. Groupon has mostly lost money in market value ever since. Using non-standard accounting is perfectly legal, providing companies also report the official GAAP numbers. And these days, young companies aren't the only ones offering up 2 sets of books. You can read more about that at Bloomberg.com. CFO.com is examining some best practices for successfully implementing the Financial Accounting Standards Board's new lease accounting rules, and they boil their advice down to 5 parts. 1, analyze existing contracts and make the best use of new lease agreements. 2, ensure executive sponsorship of the adoption process and set up a team approach. 3, define a roadmap early on to streamline adoption and final implementation. 4, prepare to communicate more information about leasing transactions to investors. And 5, decide whether to adopt the revenue recognition and leasing standards in sequence or at the same time. Read more about that at CFO.com. Finally, mark your calendar for May 13th. That's the date for this year's MACPA Business and Industry Conference, and you're not going to want to miss this one. The keynote this year is called The Business of Creative, and it will be given by Mark Greenberg. He's the Vice President of Finance and Strategy at Pixar, so it should be some good stuff. Get some details, register yourself to attend at macpa.org. That's all I have for today. Have a great night. Watch the returns come in, and I will see you again tomorrow. Take care.